Alright, here we go with the second lecture where we're gonna discuss something super crucial, which is risk and money management. Why is this super crucial? Because we as traders are actually risk managers. And if you're not a risk manager, then you are a gambler, all right? And we don't want this because the whole concept of trading is exactly managing your risk, taking the same risk over and over again, and just super simple for your winners to be bigger than your losses. This is it. There is no 100% win rate strategy. Believe me, you're gonna be taking losses and possibly your win rate will be, let's say 50, even 40. Some people have even 20 win rates, which means that 80% of your trades are losses, but they are still profitable. And then we're going to discuss on a later lecture about the risk to reward. Why is this the case? So right now, I personally, when I work with my students, personally, I am separating them into into 3 groups, actually, depending on their capital, depending on their experience and their goals for trading. All right. So let's get started. First category, I call it the A category. So this one is right there. And what is the A category? This is for traders that are, let's say, not complete beginners, but just beginners that haven't traded for more than 1 year, for example, and that are just starting to grasp the market concepts, learn new strategies, or that don't have a bigger capital. All right. So what I suggest to those people is actually 2 things. If you are just starting out, make sure to have, like, let's say, from 100 to $300 or euros, whatever it is. And what you do with this amount is you risk maximum 1% per trade. All right, so this is if you have this kind of money sitting in your trading account, maybe even to 500. We can do this to 500 as well. Just play with those little stats right there. And what you are gonna do also, if you are a complete beginner, you wanna take as many trades as possible using 0.01 lot size. All right, why do you do this? Because if you have, for example, 100 or even to $500 account, the lot size, the usual lot size are 0.01. But what you can do is you can just gonna say to yourself, I'm gonna take 0.01 lots and I'm gonna take 100 trades with 0.01 and I'm gonna journal all of them and then I'm gonna see the result. All right. So this is basically how I separate those traders. Super low risk. Why is low risk? Because right here you are learning. You are learning and you're gaining, wow man, that's so hard. And you're gaining experience, right? So this is the A category. Make sure to determine if you fall into this category. Then we have the B category. So what is this? This is for more advanced traders that have a bigger capital than 500. And I would say if you are around from 1 all the way up to 5K in capital into your live trading account, for example. This is when you are more experienced, you have some knowledge, you have traded like this for quite some time, and then you transition from A to B trader. But first of all, you have to be consistent with 0.01. You have to be consistent on your $100 or $500 account because, guys, there is no difference. It is just numbers. You're just adding a little zero on top of those numbers, right? The risk is the same. Everything is the same. You're just going to be risking a little bit more money, but in return, you're going to be winning a little bit more money. All right. So I really hope you get that concept clear because it doesn't matter if you trade $100 or if you trade $100,000, it is all the same. It is just in your mind that is not the same. It is just the monetary value that is not. All right. So if you have an account which is more than 1K, then you should be a B trader. You should be confident in your skills. And what is the goal of this B category? The goal is to raise the capital. The goal is to make percentages. All right. So what I suggest to those people is to risk from 1 to 2% per trade. 2% is nice. It gets a little bit too higher, and then you're going to create your risk and money management plan when you're going to decide actually how much trades you're going to take. What is your maximum loss? What is your daily loss, weekly loss, and even monthly loss? So you have to determine this. When you determine this, actually, then you're going to pick what kind of percentage are you going to risk per trade. All right, this is per trade. The goal of this category is, as I said, is to raise capital. So we want to increase our capital, all right, and we are confident. So we go from learning to increasing our capital and gaining experience also. So this is the stage where you gain experience, super important. And then going into the C category, which is, for example, when you go over 5K, or for example, I want to say, let's say it starts from 10K. All right. And then right here, you actually have experience and you are possibly funded as well with all of the funding programs that are available out there. And they usually offer more than 10K. So if you have a 10K account, then you should be a C trader. Again, don't rush to do those things. Don't rush to take challenges. Don't rush to get funded, and don't rush to deposit a lot of money if you haven't gone through the learning, if you haven't gotten experience and, for example, turned your 1K into 2K to flip your account. All right. And then from gaining this experience, from being confident, all you have to do is just scale. All right. This is the phase where you start scaling, where you start making more money because you're confident with your skill, you're confident with your risk, and you can get from 10K all the way to 100K in capital. It could be funded, it could be your own money. Personally, I prefer to trade my own money. When I finished with this stage, I deposited my 10K account. It was an amazing experience because from making, for example, 30 to 50 euros per trade, I started making 400 to 500 euros. And the first time you see those big numbers, it is quite stressful. But this is why you go stage by stage, and then all you need to do is scale and continue with that experience. Same risk applies. However, right here, I am conservative and I go for 1 to maximum 1.5%. Sometimes I even take 0.5 when the trade is a counter trend trade or when I see that not all the probabilities are stacking up. Why you risk less? So there is a little misconception that is going on with my students as well. So they say, when I see that I'm confident in taking 1% and I turn my account from 1 to 5K, I'm gonna start risking 2. Why? If you can explain to me why, then I'm gonna accept this one. But why do you increase your capital and start risking more and put more money, right, at stake? So what I always suggest, stick to one risk percentage and make it as low as possible. Again, the bigger capital you have, the less you risk, still the money is good. All right. So if you risk 1% on a 2% on a 1K account, you're gonna make, what is it again? So let's say you're gonna make $50, let's say. But if you risk 2% right here, you're gonna make 2,000. So if you risk 1%, you're gonna make 1,000. So aren't you fine with 1,000 and just risking 1% to keep yourself safe and in order to have a little bit of a less drawdown? All right. So guys, you have to consider all of those things. And if you haven't considered those things so far, this is the time to do so. What kind of trader are you? Are you an A trader just starting out? Are you a B trader who has already gone through the learning and right now is in the stage of gaining market experience? Because this can usually take 1 to 2 years as well. Keep that in mind also. And then once you have gone through this, then you can start getting into funding challenges. Then you can start scaling your capital as well using compound interest. This is the like the 7th wonder or the 8th wonder of the world, compound interest. It is super powerful. And what I can also suggest you to do, let me see, how do I move this one out? Yeah, what I suggest you to do is, if you are in your B stage, is to start scaling in as well. So each month, deposit a little bit. So instead of investing in stocks as well, you can invest in your trading capital. So let's say you get your salary and you deposit 10% into your trading account, and depending on your salary, let's say you deposit $500 each month into your trading account, and this one is gonna go up. And the bigger your account gets, the more you scale in, the more money you're gonna make, and the more closer you're gonna get to this goal right there. So this is a super good strategy to invest a fixed amount each month. All right. So I really hope you're finding this one valuable so far. I really wanted to touch on this one to lay out to you the 3 types of traders and to really illustrate to you that the process from going to this stage, from trading with a small account or just using 0.01 during your learning, to this stage, which is the stage that most people stay in. This is when you start blowing account. This is when you get greedy. This is when you experience fear as well, because you're not trading 100, but you're trading 1,000. And the psychology, the emotions are a little bit tougher, right? And then once you're done with this, we go into a C trader who trades more than 10K capital. And again, the risk, as you can see, I have never said anything above 2%. Feel free to risk 3, but if you lose 3 trades in a row, then you're down 10%. And in order to recover from this, you have to do quite a bit of work. All right. So this is the risk management plan, guys. Make sure to study this and make sure to include it into your risk and money management plan assignment later in the introduction section.